US dollar mixed in early Thursday trading. Before we start, a quick word from our sponsor. This video is brought to you by XNET, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link of this broker in the description below. The euro has been all over the place, as you would expect, due to the interest rate decision coming out of the European Central Bank. But what's interesting is that despite the fact that the Europeans did, in fact, cut rates, the reality is that we also had advanced GDP in the United States coming in cooler than anticipated. So that does suggest that maybe the tide's turning a little bit. I still think really early in suggesting that the euro is suddenly going to overtake the dollar. I think this ends up being a sell the rally type of event, but the market at this point, I think, is just trying to sort out all of this noise. So therefore, I suggest that the euro is probably going to be somewhat neutral to negative, with the 1.05 level above continuing to offer resistance. The US dollar has fallen significantly against the Japanese yen, and due to that GDP report, it's not a huge surprise. But I would also recognize the fact that this is a market that's very noisy. There's a lot of nonsense coming out of Tokyo and, unfortunately, Washington, D.C. as well about central bank policies. I think if they would just admit that they didn't know what they were going to do at the Federal Reserve, that might help. But instead, they choose to confuse the market during the press conferences like they did on Wednesday. Nonetheless, this is still a very bullish market, and I think that a buy on the dip type of scenario continues to be the way forward in a market that gets you paid at the end of every session via very positive swap. Finally, we have the Australian dollar, which is somewhat neutral for the day. That's not a huge surprise. We just had 3 down days. Why wouldn't we stabilize, at least in the short term? But I think any rally at this point in time, I'm still looking at the 50-day EMA as a potential barrier. And then again at the 0.6350 level. I have no interest in buying the Australian dollar, but do have interest in buying the US dollar. And in fact, if you look at the chart, it almost appears like we are forming some type of bearish pennant, but it's a little early to call it that. Nonetheless, it does line up with the overall trend. My name's Christopher Lewis. I work for FXEmpire. If you enjoyed the video, give me a thumbs up and subscribe for more analysis.